Hey traders, Akil Stokes here, and thank you once again for joining me for another one of my Forex Weekend Review videos. If you're one of the many supporting subscribers here on YouTube or anywhere else across internet land, I just want to say thank you as always for the support. You guys have been doing a great job of helping us grow this community and spreading this positive energy. And well, if this is your first time watching me, this is a weekly video that I put out talking about the Forex market. Now in today's video, we're going to talk heavily on technical analysis, but I also talk a lot about trading psychology, which I believe is the most crucial element a trader must have if they want to be consistently profitable. Speaking of trading psychology, if you haven't done so already, make sure you check out this quarter's edition of FOREX Trader Magazine, FX Trader Magazine. On page, I think 58 and 59, I have an article featured in there. So give it a read and feel free to leave me a comment under this video letting me know what you think about it. I had a lot of fun writing it. The feedback has been great so far, so definitely spread the word. Now, earlier in the week, I posted a trade to TradingView looking at the pound dollar. This was a pair that we've had on our radar for a long time now. And in that trade, I wrote out, you can see the text box in front of you, I wrote out decision point. And I want to take today's video to kind of describe what the decision point is. The decision point is a place in the market where we have a decision to make about what type of trade opportunity we want to involve ourselves in. And we do so using the if-then thought process. You see, a lot of rookie traders, a lot of newer traders, I should say, get into trouble with their analysis because they're too quick to put themselves in the move. Now, don't get me wrong. There are certain strategies. There are certain times in the market where the aggressive trader is going to have the upper hand. But when it comes to, say, a simple style of trading like support and resistance, sometimes making a more conservative approach or taking a more conservative approach is the better move to make. And what that means is that, let's take this example, let's take this chart for example. Instead of saying I'm going to buy or sell as soon as the market comes down to this price level, just by clicking it at market, you use that if-then thought process. If price action does this, then I will do that. If price action does that, then I will do this. And you're really waiting for the market to confirm or to give you confirmation of what you're looking at before putting your hard-earned money at risk. So I did get a few questions about what the decision point means, and I just want to explain that to you. And we'll kind of work through that if-then thought process as I break down the pound yen. So if we look at the daily chart of the pound yen here, you'll see that we just created a lower low, lower close, giving us a new structure low. This is an indication or something that allows us to assume that price action is going to continue lower until we're told otherwise. So as I go through my IPDE process, identify, predict, decide, execute, I want to ask myself, where is the next place that price action is likely to find some support at in this case? Where are the bears going to be exhausted? Where would the bulls be looking to get involved? And to do that, I'm going to have to go all the way out to my weekly time frame. Now, I typically don't venture out this high on time frames, but we're kind of in the middle of no man's land on the lower ones. And when looking at this price chart, the next level that stands out to me is going to be right in here. That's right below, let's see, what is this number at? Pound yen moves a lot. Right around this 147 level. And I'll show you why I'm looking at this level. If we check out price action, we start at the bottom of our chart here. You can see we move up, we move down. We then put in a new structure high right here, and we run into some resistance. Go ahead and put a red arrow in there. Boom. Price action bounces off that resistance level. We then blow right through it, coming back to retest it, which once was resistant now turns to support. Now after that, we actually tested it twice, putting in a little double bottom here, boop, boop, before rallying up and creating new structure highs all the way up here. So as we come down to that level again, I see that this particular level in price action has been tested twice recently. It's been tested once as resistance. It's been tested once, really twice as support. So if I'm making a prediction on where price action is likely to, again, exhaust itself, where are the sellers looking to take profit at, where are new buyers looking to get involved, this is going to be the perfect level. Now, that's the overall prediction. Obviously, we're a far ways away, so I don't have to worry about how can I attack this particular trading opportunity right now. But I just want to give myself that mindset of what I expect the market to do. What am I identifying on the price chart? What is the prediction that I'm making? So now that I've made my prediction that price action is likely to come down to this level, I want to ask myself two questions. Not only where is price action likely to go, but how are we likely to get there? And there are two ways that could happen. We can either go straight down, or we can put in a retracement before going straight down. And I know that's going to give me an opportunity to get short. So now that we've got the top down stuff going on, let's go down to our hourly time frame and let's talk about potential trading opportunities. Now, real quick, I'm going to take the time just to walk through the ebbs and flows of the price chart, and you'll see why later. If you're new to technical analysis, if you're not 100% confident on how to read a price chart, I think this is an exercise that you should be doing all the time. And it's simply taking your line tool and going like this. Starting point, swing high to swing low, outside return, swing high to swing low. You can see a little consolidation right here, outside return. Let's zoom in a little bit. Swing high to swing low, some more consolidation right here, swing high to swing low. Now, we know that when we get these outside returns, when we get these retracements, structure acts like a magnet. So there's a good chance that we may get pulled back into structure. So if I'm predicting a retracement to happen, then I'm looking for price action to make a move right back up to our structure level, right in, get my crosshairs on here. Starting at this 154.50 level and going to about 155.34. So let's go ahead and draw a little kill zone up there, a little box for a kill zone for potential shorts, right in that area. All right. So again, if I'm looking for retracement, if I'm looking for a chance to get short this market in continuation of that bigger move we talked about earlier, then this is the area where I'm looking for that to happen. Now, we can take it a step further. And this is, I always advise that when you start off trading, guys, you focus on one style of trading. It could be trading advanced pattern formations. It could be a trend continuation trader. It can be a counter trend trader. Pick one, master one. Don't confuse yourself by trying to do too much at once. That's an easy way to get into trouble. So for this video purpose, because I don't want to hurt you more than I help you, focus on only the way of trading that you plan on doing. So trend continuation traders focus on the pullback up here. And what I'm about to give you is a counter trend move. Now, if you're asking yourself, Akil, I see this double bottom here. Is there any way I can get involved in the pullback? Because if you're predicting a pullback, that means the market is going to go up. If the market goes up, I want a way to be involved. Now, I wouldn't enter this double bottom. Why? Because essentially we're in the middle of no man's land. There's no recent structure here. I don't think it's, for me personally, it's not an area in the market where I would be comfortable putting my money at risk. We see a lot of hype over double tops, double bottoms, RSI being oversold or overbought, or ABCD patterns. In my opinion, by themselves, it's a very quick way to go broke. So instead of just simply looking to buy this double bottom, oh, it's a doji candle, buy it, right? Instead of buying that, what is an alternate way, a more safer way that you can use to get involved in this move? All right, I'll pause for a second because some of you know the answer. If not, I'll give you a clue. It's right on our website under the Learn to Trade tab, and it's completely free. Yep, 26.18. So as price action comes down, right? Let's adjust this. I'm not good with this platform, but I'm trying, guys. All right. So we have our double bottom right here, right? If price action gives us a move like this, boop, boop, we're looking at a 26.18 buying opportunity right down here, which means it's an opportunity for us to get a more conservative approach, a more conservative entry to this double bottom, and a chance to ride the market up to this retracement, taking off profit targets in the way. So that's certainly a way to get involved if you're long. And again, if you're short, you're looking for a way to get involved on this retracement and short the market right here. Of course, you can do both. And guess what? If you're someone that trades, say, advanced pattern formations, you may get a move like this. Let's just bring out, I'm not going to bring out the fibs, but we can easily see this as well. With this, if this 26.18 occurs, you can easily see something like this. That's going to give us an advanced pattern formation. This will make it easier to see. X to A, A to B, B to C, C to D. Could be an advanced bat formation, could be an advanced Gartley formation, all depending on that B leg and that C leg extension and pullback. But for pattern traders, someone that maybe isn't a trend continuation trader that only trades advanced pattern formations, well, now you have an opportunity to get short as well at the same level and trade it as an advanced pattern formation, or potentially using that advanced pattern formation as an entry reason into the trend continuation trade. So, but the point of this, and I feel like I made this video, I hope it's not too confusing. I know these videos are usually geared towards newer traders, so I try to make it a simple lesson. So if this is a little bit confusing, guys, just go back and watch some of my older videos. Don't run, don't be afraid. I don't want to make it seem like it's rocket science with terminology and whatnot. But the point I want to get across is that all of this starts with the if-then thought process. All of this starts with doing that IPDE and having that routine in your analysis. Instead of reacting late to a move, I got to get on the short move right here. The bears are taking over. To relax, do your top-down analysis, go through your normal routine, and walk yourself through that if-then thought process. If price action puts in a double bottom, then I wait for 26.18 for entry. If price action pulls back to previous structure resistance, then I look for a trend continuation. If price action presents an advanced bat formation, then I use the advanced bat formation as an entry reason into my trend continuation trade. And if you put yourself in that mindset of if, then, not only does it put you one step ahead of the market as far as making those predictions, but it allows you to feel that much more comfortable with your trade execution, eliminating some of those emotions in the process. So speaking of emotions, we're going to get into this a little later. Actually, I'll do this. I'm gonna at the end of the video, I'm gonna share. We had a really good talk this morning in my live trading room about. We had a discussion with a trader who was, he was getting emotional while in the middle of a trade. We had a really big discussion about the importance of handling emotions, the importance of having a completed trading plan. And I'll share that at the very end of the video. But just want to say thank you guys once again for all of the support. Do me a favor. If you find this informative, give me a like, give me a share, leave a comment. Again, check out the latest edition of FX Trader Magazine and check out the article I wrote in there. Leave me a comment under this YouTube post and let me know what you think. And I'll see you guys next week. For you guys interested in hearing the recording or seeing the recording of today's live room rant, just hold on at the very end of the video and I'll put it on. All right. Probably the most awkward ending to a video ever, but I'm kind of rushing things today. So hope it's still informative. All right, gang. What I was supposed to say. If you like this type of analysis, guys, we do this every day in our syndicate program. That's what I'm supposed to plug my thing, right? We do this analysis every day in the syndicate program. It's only $1 for your first month. So check it out. Take your first month for $1. If you like it, you can stay. If you don't like it, you can always cancel. And all you've invested is $1. But most people stay because it's well worth it. And of course, the next step above that syndicate, for those who have time, is joining me in my live trading room. So I hope to see you guys in one of those two places in the future. And until next time, plan your trade your plan. Best of luck in the markets as we look to close out our trading week. Would it be fair to say that? Well, let me ask you this first. Do you have a trading plan with clear defined rules for entries, stops, and targets, and the management of trading? Yes, I'm not the best at following it, though. Why do you have it then? What's the point of doing all that hard work if you're not going to follow it? Okay. Yeah. All right. What it sounds like to me is exactly what you said. Yeah. If nothing has violated your trade, meaning the market hasn't done anything to tell you that you're wrong, or if it wasn't a bad trade, meaning if you entered a trade and then went back and realized that you're not supposed to be in it, you just need to be disciplined. It's all emotional right now. You've got a risk reward. You've got a solid stop. It looks like you're above structure. You've got a solid target back down at previous structure. You just need to be disciplined. Just stick to it. Trust yourself. You've got a trading plan. I'm going to assume that you worked very hard on creating that trading plan. You spent hours and hours and hours back testing it. Now you got to use it. Don't be so quick to bail on it. Don't spend all that time building a car from scratch and then not driving it, right? Trust your plan. All of the hard work, the majority of the hard work in trading, guys, is done before we ever enter a trade. Let me repeat that. And this is something I pulled from Pitbull as well. He got a letter from a trader he looked up to. The majority of the hard work in trading is done before you ever place the trade. All of the hard work comes from developing a strategy, back testing a strategy, tweaking a strategy, back testing a strategy again, forward testing a strategy, creating a trading plan, analyzing the charts, placing the entries, placing the stops, placing the targets. That's all the hard work. Once you're in the trade, your job is done. Once you're in the trade, your job, unless you're actively managing it, and that's going to be something that's in your trading plan, that's a little advanced, but unless you're actively managing it, your job is done. Your job is to sit back and let the market do what it wants to do. You've got to trust your analysis. Trust that you put yourself in the best position to profit. Trust that your stops are in a safe enough area, yet not far enough where you're risking or exposing too much. And trust that your targets are at an area where they have a good chance at being hit. But that's all pre-market analysis. That's all before you enter the trade. Once you click that sell button, it's out of your hands. It's not up to you anymore. And it's hard. A lot of traders are entrepreneurs. A lot of entrepreneurs like power. That's why we become traders in the first place, right? We like the power to control our own destiny, to do what we want to do. That's why I like being an entrepreneur, because I don't like being told what to do by other people. That's the main reason I want to become an entrepreneur. I don't like being told what to do by other people. So it's hard to give up that control and say, it's up to the market now. But that's all we can do. So it takes a massive amount of trust. So trust yourself, Tanner. Trust yourself. All right. I see 0 red flags in the trade that you set up. I'm very impressed that you do have a plan. I'm very impressed that you're so honest to say that I have it, but I don't follow it. That takes a massive amount of cojones. But you got to trust yourself. And it starts now. It starts with this trade. It starts with this trade. This is the trade where you trust yourself. You stick to your plan. You don't move anything. You don't adjust anything. And you tell the market, you're either going to stop me out or you're going to give me some money. But either way, whatever happens, guess what it is? If you follow your plan, what is it, guys? If you follow your plan, what is it? It's a good trade. Process over outcome.